The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we headed into the three-day holiday weekend on Friday, the weather market rally continued in the grain trade. It was up, and away once again throughout the corn, soybean, and wheat markets. Here to talk about it with us, go through some risk management, and really dive in and take a look at what's going on here. We welcome in DuWayne Bosse with Bolt Marketing is joining us here on today's show. DuWayne, always good to catch up with you, my friend. I hope you're doing well.
Yeah, doing better than well on the last couple of days of the market. Everybody's happier when the market's higher, Jesse. That's pretty easy.
Yeah, I was going to say, this is always fun when there's plenty of green on the screen. It just, I don't know. I feel better. I feel more positive. It gives us some good things to talk about when we're talking markets, and considering the way this market has been, through much of the spring. It's nice to get a little bit of a weather rally here, DuWayne, and that really seems to be what the case is. I mean, forecasts just turned drier, and a lot of concern now out there about crops and development as we get into a critical time period. This holiday weekend, this new holiday with Juneteenth, is kind of like 4th of July in a sense, as to what used to be that 4th of July holiday weekend in the trade, and now it's kind of bumped up to this Juneteenth weekend, and it's just a critical time frame right now, DuWayne.
It really is. Boy, I agree with everything you said there. I think this rally feels so good because, somebody like me at least, and I actually think if everyone admits, we all missed out on it the first time. We thought there was going to be a spring rally, right? And seasonally, that's okay to assume. Markets usually do. You hardly ever see a market go from harvest and just grind lower into June. It normally doesn't do that. And that's what we did this time of year. So to get this rally, to get that second chance feels so good. At least I feel like I'm off the hook anyway. So, but you have to take advantage of it. And we did. We sold it hard here this week. Went from really nothing, sold to 50% on new crops, sold the old crop before the basis flipped. Just started selling some new crop beans today here too. Got to reward the market on this rally. And you're right about the holiday. It used to be July 4th. We'd always, watch the weather maps. It seems like we would rally going into July 4th, come back after the 4th, and sure enough, someone got more rain than anticipated. Usually it's an I state, or there's more rain in the forecast, and that's your summer high. And I could totally be wrong. This is just a gut feeling, but it feels that way to me today, that we're going to come back after a 3-day weekend, and I can't imagine the forecast being hotter and drier because it already looks horrible. If there's any rain in the forecast or cooler temps, I think we reverse lower, but we'll see come Monday night and Tuesday when the trade opens back up.
Definitely, yeah. The trade's going to open back up Monday night at 7 p.m. With the overnight session. I think about these markets. I want to focus first on corn. That feels like the biggest area of concern when it comes to the weather right now. The last couple of days of rally, DuWayne. I mean, we've gapped higher. We've left some gaps underneath us as we broke through some resistance levels. But as you look at this market here, I think about D's corn pushing up towards $6 again. I'd have to think, to your point, got to reward that rally, even if you are concerned about the crop in your field, because we were talking about this off air before we went live. There are plenty of tools to manage some of that risk out there, DuWayne.
Well, yeah, I understand if you don't want to make cash sales because you're worried you don't have the crop, but that's exactly what the futures market is for. Remember, you can sell the futures market today and get out of it next week if you think you don't have the crop. Now, yeah, there'll be a price difference in between you'll have to pay, but at least you don't have to deliver. Or you can sell the board and protect with short-dated call options. There's just a number of things you can do. If you decide to do nothing, that's a decision too, and maybe that'll work out just fine next week. But it's just what an amazing rally. Like I said, we got a gap down at 532, 535 area. That gap will be filled sometime. The biggest thing for me, Jesse, is this rally is based on a fear that we're going to lose supply, not driven by demand is increasing. They came up with a new form of ethanol and jet fuel. We're going to use that. Demand sucks, actually, if I can say that.
Yeah.
Our basis is just crumbling, showing that the export market is bad for corn. We're talking here. And even if you drop the yield down to 170 or 175, and you lose 1 million acres, like I've been preaching forever, that the principal crop acres are too high, we're still forecasting 2 billion bushels for export. You can knock that down 300 to 500, and that just offsets the losses in production I just mentioned we could have. Then all of a sudden, we still got a 2 billion bushel carryout, and we're below $5 this fall. That's the scenario I see playing out. That's why we're selling it so hard today.
Well, here's a thought that I want to run by you and get your perspective on, because you look at this, from a trader perspective and from the farmer perspective. And I know sometimes that, farmers say, oh, well, I'm going to wait for this to get to, 580 and then I'm going to sell. Well, then it gets to 580 and it's like, well, this market looks pretty strong. Let's let it go a little farther. And then next thing you know, it crumbles underneath you and it's back to 480. So,
right.
Psychologically, talk about sticking to the plan and sticking to those targets that you have. I feel like that is so important to try and remember when you see a big rally and plenty of volatility like we've seen here to wrap up the week.
Yeah, emotions are just the enemy of any hedger, profit taker, producer, however you want to call it. And we all have it all the time, some worse than others, of course, right? I guess, to control those emotions, there's a number of different ways you can do it. You can put them into a spreadsheet and look at that profitability and then just place those target orders and, slap your hand if you go to change them. It doesn't matter. Remember, the weather had to get hot and dry to get us here. This isn't the market got here and, well, it's hot and dry in Illinois. Well, yeah, that's what rallied the market to this point. It's a futures market. The futures market knew it before you did. There's other ways. I have one gentleman that sold the board fairly hard. He bought courage calls a long time ago that now are in the money. And he openly said that, that gave me the ability to stay short this market as it rallied, knowing that emotions just would have got the best of them. And that's the worst thing you can do, is sell the board, watch it rally, and then get out because you think it's going to 8. We've all done all these mistakes you and I are talking about now, and we've got to learn from them and just stick with it. The biggest thing I just can say is that we can lose some yield and some supply. We're just not going to export it anyway. We were the highest price world corn market before this rally. So what do we think higher prices are going to do? They're not going to generate more demand.
Well, and another thought too, on top of all of this, is that coming up here in just a couple of weeks, we're going to get that end of the month acreage report, quarterly grain stocks numbers, very big reports from USDA. And, I think about this, obviously watching this weather rally, I know that, any losses probably won't be, projected into those numbers. But then again, USDA, who knows what curveball they could throw us at the end of the month. So it's, we have a pretty big milestone that is creeping up on us as we continue to watch this weather rally, DuWayne.
Yeah, you're right. That's a huge report, and a report that I've been waiting for for a long time, thinking that, this winter, I just didn't agree with the total principal crop acres. Now, a lot of that had to do with the 18 feet of snow I felt like I was under here. It was an amazing spring. We had an unbelievable weather flip, almost a drought. And so we got the crop planted. There's still more prevent plant acres are about the same as what the trade is forecasting. So I'm not looking for us to gain acres. So I still think, the acres could be a little bit lower. But the basis and what it's doing nationwide here last week, concerns me that the corn stocks are higher than anticipated. There's some bullish twists in there. People saying that China are canceling because we don't have the corn, not because they don't want it. No, I don't think that's the case. I think we're trying to turn a bullish story out of a bearish story. But I guess what I'm going to say is it's probably going to be a mixed report. I could see the quarterly stocks being negative. I could see some some acres down a little bit, but like I just mentioned, I already took 1 million acres off my S&D table, and all I do is decrease demand and I offset it. So in the end, I'm afraid it's not going to matter.
We're having a conversation today with DuWayne Bosse of Bolt Marketing. DuWayne, the soy complex, I want to touch on that a little bit, especially the product market. Just super strong on Friday. I know that we got the NOPA May crush numbers came in a bit higher than the trade anticipated. A lot of support in palm oil, weather issues in Malaysia helping out there with boosting palm oil prices, and canola good, bean oil obviously. I just look at that product market wrapping up the week, and man, a lot of strength there. And on top of it too, we're waiting now on a delayed announcement from EPA when it comes to advanced biofuels, et cetera. That's supposed to be coming here in this upcoming week, DuWayne.
Yeah, and I think the market's anticipating some bullish things from EPA out of that. And you saw in the weekly export sales report last week, there was this rumor about Europe was buying US soybeans and then crushing them and then sending the oil back here. Now, economically, that doesn't sound like that would be feasible, but evidently it is, because we saw in this weekly export sales report, Europe was a big buyer of our soybean market. This soybean market, you can just tell something's been going on here. That and hogs almost. And those are the two markets that money likes to flow into when China is going to announce some sort of stimulus package or EPA is going to do something. I mean, it's been just a rocket ship. And like you said, it started off with beans, and then it was bean oil. And then today, soybean meal decided they better join the party and just took off. So something's going on here. Now, I mentioned all the bearish talk I had in corn. In beans, I was a slow seller of new crop until today, just getting started. Got to reward the market after a $2 rally, right? And the reason I'm slower is it's tighter old crop stocks. And if you take 1 or 2 million acres off a new crop, even at a trendline yield, all of a sudden our soybean situation is tight, despite Brazil's huge crop. And despite Brazil's huge crop, our export demand is still here. It's still okay. So soybeans just have a little bit more potential, or a tighter stock potential, and then a higher rally potential. So it's definitely a different market. I like it, but like I said, even I sold it a little bit today because, man, $2 off of the low. I mean, thank your lucky stars. Put a little bit extra in the offering plane this weekend and move on.
Yeah, that is a big, big move there. And as you you mentioned there, alluded to that good old pork and bean trade kind of going together here as of late. And you know, with soybeans, I look at Nove beans, that new crop getting back above $13, fairly sizably now. I'm with you. It just feels like an area that we got to reward this rally if we need to. DuWayne, let's talk the wheat market. Pretty solid numbers there as well to wrap up the week on Friday. And I feel like the hard wheats, hard red, hard spring, have been doing a bit better than Chicago wheat here as of late. And this wheat market doesn't feel like it's the leader. I know some people have been waiting for wheat to be the leader. Not quite there, but it seems like wheat just taking advantage of the strength in corn and beans on the weather rally, but also some of its own challenges in wheat country here in the U.S. specifically, DuWayne.
In the U.S. and in the world. The last USDA report showed large increases out of Russia, Australia, Europe, Ukraine even. Well, there were a small decrease actually, but just everywhere had more wheat projected for this new crop year, and rightfully so. And the Russia-Ukraine war, even though it's still ongoing, intensifying, the trade doesn't care at all about it. So you were right to say wheat's the follower here. Now on a chart, it looks pretty nice today. That's a heck of a nice follow, nice spike up. I don't have a lot of good to say about the wheat market just because the fundamentals aren't just quite the same. I mean, we're tighter than we've been for years domestically, but it just doesn't seem like this market just wants to care about it, I guess. I look at spring wheat, for example. A lot of it doesn't look the best because of how hot we've been up here. Even if you have the moisture, spring wheat is not like 90 degrees, and we had some of that here. So it's got that bluish gray tint to it. It's a follower. You get spring wheat, new crop spring wheat to $9, and I'm going to tell guys, you better get hedging there. I know we're a little ways off of that yet, but with this rally, the way it's going, it could continue a little bit. But yeah, just not excited about the wheat market, mainly because of world supplies getting bigger year over year.
Good thoughts. Let's talk livestock. I want to ask you about cattle.
Mhm.
An okay day on Friday in cattle despite the rally in grains, but I gotta wonder, have we peaked in this cattle market? I think that's the big question that
I,
everyone's asking,
I knew it was.
DuWayne.
Yeah,
And
I knew it was coming.
yeah, and I don't know if there's a good answer here. I really don't. If you're a chart watcher, you might be saying,
Yep.
yeah, it looks like we gotten pretty toppy and we peaked. And then there's some people that say there's no way, just considering the way inventory is out there, et cetera, et
Right.
cetera. So, what's your thoughts? Any thoughts here in this cattle trade?
Well, let's back up a little bit and take it piece by piece. You're right. The way that chart pattern reversed off the highs of August, we were above 178, and the way it finished that day, that looked like a peak. If there ever is a chart that looks like a peak, that's it. And then, cash market was steady the next week, looked pretty good. And well, now this week, so far at least, cash cattle traded around 186. And that was about $4 lower up north than we were the week before. The word is that all of a sudden one of the packers have plenty of cattle. They've got enough cattle for the next 4 weeks. Next week, we'll find out whether they were bluffing or not. Because on one side, I think it's really hard to believe that they went from buying cattle and having trucks show up about an hour or two later because they were so desperate to all of a sudden they've got enough cattle bought for the next 4 weeks. On the other side of it, it does look like a top to me. Funds watch charts and they're long. And if they look at that chart and think that's a top and there's no more upside, they'll get out. And if the Packers can help with the funds and force the futures market down, you watch the cash market will follow lower as well. So I'm actually on the camp of that probably was the high. Do I think we have to go crashing lower? No, I don't, because the production numbers are still so tight. But we had this hole in the production that you and I talked about weeks before, and I feel good that it happened. It's here, but the calves are going to start showing up now. Carcass weights have actually increased just a little bit last couple of weeks. So I think that was the high. I don't think we have to tank, but it's maybe time to look at some hedges, some LRP, things like that. Protect that huge capital investment you have in a feedlot.
Very true. I think in the case of the feeders too, I've heard a lot of chatter this week. A lot of guys and gals calling and trying to lock in some of their feed needs on the corn rally as well. So I think about that. That's another piece in this cattle market as well to pay attention to.
Well, and I think they got caught here for sure, right? Because remember a couple of weeks ago, this corn market looked bearish and, just sit and do nothing, and you look better every day if you haven't locked in your feed needs. Now all of a sudden it's, oh crap, what did we do wrong here as the market rallies again? And feeders should stay strong this fall yet too. I mean, even though I'm pushing the LRP, but that's why I'm pushing the LRP and not selling the board, right? Is LRP is a glorified put option. You buy it and then you hope it's a waste of money. If the market's higher, you'll get the higher cash price. I'm just worried about that black swan event that could happen. But looking at the weather maps and models out there for the next few months, it does look like these rains are going to continue in what I would call the Western Plains, which I would call like the pasture area. If they're wet this fall and they have nice green grass, they're actually going to want to increase their herd size. That means those heifers you're selling this fall might be about the same price as steers, which could be a whole lot of fun. So I think the market's got great support. I just, big surprise. We got up to 245, 250, made new all-time highs, and then it struggles a little bit, which markets tend to do at highs. And markets also peak when the news is the most bullish, and it seemed that way that day it peaked, didn't it?
Yeah, it definitely did seem that way. Hogs, you touched on a little bit when we were talking the soy complex, but this hog market, I think, fingers crossed, we've maybe found our bottom and bounced off of it a little bit here at least, and it really looking like we've turned a corner. I'm not calling for us to be extremely higher here, but I feel like we've at least turned a corner in this hog market.
Absolutely, yeah, same deal, Jesse. Take it piece by piece. I think we made the low, and that low was too low. Right, we knew it as that knife was falling, but luckily most of us are smart enough not to even try to catch that thing. Let it hit the ground before you try to pick it up. They went way too low. So first you get that dead cat bounce where we should be. And I thought that was like that 185, 187 area. Well, now we're above 190. And the hog market is kind of almost the good old boys club. Like you're not going to get a lot of information out of that. But the people in the know are saying that there's more bullishness to come here in this market. And I can't tell you why and what the fundamentals are behind it. Maybe it's more of like a next year story that there was a lot of herd liquidation this past year, people not wanting lose any more money with the high price feed costs and low price pork. Not to mention, that pork loin looks really cheap in a supermarket next to that ribeye steak that I prefer to buy this afternoon. So maybe there's better things to come there. But when I don't know what's happening in a market, I also like to just look at the trade action. And soybeans and lean hogs, like I've said, the trade action just screams there's something going on here and it's bullish. And until it looks any different, just ride the wave.
Good thoughts to consider. DuWayne, before we let you go today, anything final you want to share with us or reiterate to folks who are listening in here heading into the holiday weekend?
No, not really, other than the fact that we both look really good in blue.
I swear we did not coordinate this.
I know. If you'd have a Twins hat on, we could really go with this. But yeah, no, baseball season, fun, College World Series this weekend. Have a good weekend and sell some crop.
Yes, and if you need some advice on making any sort of moves with your crop or your marketing plan, I know folks can give you a call there at Bolt Marketing. What's the best way to get a hold of you, DuWayne?
Yeah, if they want to know what you and I will be wearing next time, just go ahead and call us direct, 605-448-2365, or they can check us out online at boltmarketingllc.com.
DuWayne, always appreciate the time and insight, my friend. Have an awesome weekend, and we will talk to you again soon.
Yeah, you too. Thanks, Jesse.
DuWayne Bosse, Bolt Marketing, our guest today. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.